So we have an associate. We don't have any information about the associate, but we have an associate, and we need to figure out what are the steps we have to do to deal with the equity accounting requirements in AASB 128. Now, the first thing that you need to do is, if the investor uses fair value accounting for their investment, the investor has a choice of fair value accounting and cost accounting. If the investor uses fair value accounting, you need to adjust the investment back to cost. So the very first thing that you need to have in there as a starting point is cost. If the investor uses cost, then you don't need to do anything at all, and you can ignore this step. Once you've done that, if you need to, you then adjust the investment carrying amount for the investor's share of a number of items. Now, these items can be done in any particular order. It's really up to you how you work through this. Current year profit. So you need to take the proportion of the current year profit. This is profit after tax. So whatever proportion the investor has a share of the associate. So if they happen to have 25% share, then you would adjust the investment for 25% of the current year profit. You would also adjust for current year dividends. This is actually a negative adjustment, and as we go through the example and we'll see the numbers play out, you'll see how this works. The third thing that we need to deal with is any prior year changes to retained earnings. So retained earnings from the point of, let's just say acquisition, from the point of acquisition to the beginning of the year that we're dealing with. And then any other equity item changes that are relevant. So things like revaluation surplus. In the example that we'll see, there's a general reserve that gets adjusted. So any of these other equity items we need to make adjustments for.